Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 stocks that score a 10 out of 10. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 stocks that score a perfect 10 on the TipRanks Smart Score. Now the Smart Score looks at 8 unique factors and measures a stock's likelihood to outperform the overall market. On top of this 10 out of 10 score, these stocks also come in with a strong buy consensus from Wall Street analysts. So we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. And just a reminder, if you enjoyed today's video, do me a favor and make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into our 3 10 out of 10 stocks. First on the list today, we're taking a look at Baker Hughes. Their stock trades under the ticker BKR, currently priced just shy of $32 per share. Over the past year, they've gained 12%, and over the last 3 months have climbed 5%. Their 10 out of 10 Smart Score does come with increased hedge fund activity, increasing by 3.7 million shares, and very positive crowd wisdom. Baker Hughes is a leader in oilfield services. The company works with advanced industrial tech, developing and deploying the latest advances to smooth the path for industrial firms looking to streamline clean and reliable energy solutions. Baker Hughes provides services directly at the oil patch, in petroleum and natural gas production, as well as in supporting areas such as natural gas liquefaction and gas turbines. Looking at the company's revenue breakdown, we have 2 main business areas, with oilfield services and equipment and industrial and energy technology. Breaking down the revenue by product and services, the main categories are well construction, gas technology equipment, completions, interventions and measurements, and production solutions. Baker Hughes does also pay a quarterly dividend, and they have been paying and increasing that dividend since 2017. The latest dividend was 21 cents per share for a dividend yield of 2.42% and a payout ratio just shy of 50%. They'll be reporting their Q1 results just next week on April 23rd, and this does follow fourth quarter results back in January that exceeded expectations. For their Q1, analysts will be anticipating earnings per share of 40 cents, which would be a 12-cent increase over last year. In their fourth quarter, they reported earnings per share at 51 cents, beating expectations by 3 cents per share. The company also had IET, or Industrial Energy Tech orders, of over $3 billion, and that was their 5th consecutive quarter above that $3 billion mark, and net income to the company was $439 million, which was up $257 million year over year. Looking at their full 2023 fiscal year, their IET orders of $14.18 billion grew 12% higher than the previous year's record level. With 17 current analyst ratings, the Baker Hughes stock does come in as a strong buy. That is based on 14 buy ratings and 3 holds. Analysts' average price target comes in at $40.77 for an upside potential of over 27%. Looking at our detailed list down below, we have a lot of price targets ranging in the 20 to 30-something upside potential. Our low-end price target is a hold from Wells Fargo with an upside of 8.5%, and our high-end price target we have to go back to January for from TD Cowen with an upside of 52%. For our second 10 out of 10 stock, we're taking a look at Semtech. They trade under the ticker SMTC, currently priced at $32.21. Overall, the stock is up 40% in the past year, but recently has exploded, growing 62% in the last 3 months. They score a 10 out of 10 Smart Score with bullish blogger sentiment, increased hedge fund activity, and very bullish news sentiment. Semtech is a semiconductor chip company and is actually one of these smaller chip companies with a market cap of just over $2 billion. Their product line includes analog and mixed signal chips that focus on communications, enterprise computing, and industrial markets. The company's chips have applications in wireless RF, circuit protection, and signal integrity, and are found in high-end consumer and industrial products. Semtech did share their fourth quarter earnings report just a couple of weeks ago on March 28th, and their earnings per share did come out with a slightly wider than expected loss. For their fourth quarter, they did report a loss per share of 6 cents, and that was 2 cents wider than analysts had been anticipating. The company did report net sales of $192.9 million, which was above the midpoint of their guidance, and full-year sales of $868.8 million. Management said that end market demand for their semiconductor business has progressed from stable to growing, and that while their hardware business remains constrained, they believe Semtech is well-positioned to benefit from near-term growth trends, particularly in their infrastructure end market. Following that earnings report, we did hear from a handful of Wall Street analysts, including Quinn Bolton from Needham. Now, Quinn Bolton is a 5-star analyst who is ranked in the top 1% of all of Wall Street. He noted that the company recently showed a stronger than anticipated fourth quarter performance with point-of-sale improvements that mitigated the impacts of channel inventory digestion. Additionally, he was previously optimistic about Semtech due to changes in management and an expected increase in operational efficiency, including better management of operating expenses and debt. With 9 analysts currently weighing in on the Semtech stock, it is rated a unanimous strong buy. The average price target comes in at $38.31 for an upside potential of 19%. Looking down below, we have a ton of 5-star analysts weighing in on the stock as well. On the low end, we have a slight downside of 3.9% here from Stifel Nicholas, and our high-end price target comes in at $50 from Robert Baird for an upside of about 55%. If you've made it all the way to our third stock today, this is your reminder to make sure you hit that thumbs up button. Our third 10 out of 10 stock is Dycom. Their stock trades under the ticker DY, currently priced at $133. The stock has climbed 44.8% over this past year and is up over 16% in the last 3 months. Their 10 out of 10 Smart Score comes with increased hedge fund activity and very positive crowd wisdom. Dycom provides specialty contracting services throughout the United States. With a workforce of over 15,000 employees, they are a leading provider of specialty contracting services to the telecommunications, infrastructure, and utility industries throughout the U.S. They provide a wide array of specialty services, including program management, planning, engineering and design, aerial, underground, and wireless construction. Their next quarterly earnings report isn't due out for another month on May 22nd. This does follow a fourth quarter report back in February where earnings per share did fall short of expectations. The company did see a slight increase in their contract revenues, however. For their fourth quarter, Dycom did report earnings per share of 79 cents, but this did fall short of the 94 cents estimated. Contract revenues came in at $952.5 million. And looking at their annual highlights, their contract revenues did increase 9.6% to $4.176 billion. Recently, a 5-star analyst at B. Riley Financial did upgrade their rating on the stock to a buy from a hold. They said, following 6 quarters of softening organic growth and previous concerns about financial performance during seasonally weaker months, this trend and seasonal risk is poised to reverse. And as organic growth rebounds, the company should see a continuation of improving profit margin expansion. And with that one hold rating being upgraded to a buy, the Dycom stock now has 7 unanimous buy ratings and an average price target of $157 for an upside potential of 17.8%. Looking at all of our ratings down below, we can see on the low end we have an upside of 8.7% from Craig Hallam, and a high-end price target is from B. Riley Financial with an upside of 29%. So that is a quick look at 3 strong buy stocks that all score a 10 out of 10 on the TipRanks Smart Score. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. And if you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a wonderful day, and I'll see you back here next time.